Hello aspirants and welcome again to Legacy IAS Academy. In this lecture, we will be discussing about the new income tax bill that has been recently passed by the parliament. So we'll understand the reasons as to why this new income tax bill has been brought in. At the same time, what are the key changes that have taken place in this income tax bill and what does it mean to different stakeholders. So let's get started with respect to the new income tax bill. Now, as the news is coming in that it has been passed in the parliament. Now, this income tax bill of 2025, which has been passed, is going to replace the Income Tax Act of 1961. Yes, of 1961, that is about, in fact, over 6 decades old. It is basically 64 years old. So it was quite archaic and old in nature, as a result of which it did demand. The simple logic would be that it would demand certain changes, but we will specifically also see what are those changes. Now, this is going to be effective from the next financial year, that is April 1st, 2026. So let us understand what are these key changes and what does it mean for various stakeholders. Now, before we move on to that, an important announcement about the new batches that are going to start in the month of September and October. The regular batches, that means the weekday batches, are going to start from 22nd of September as well as 16th of October. So these are the two upcoming batches. Then there are weekend batches specifically favored by the working professionals or the students who are still probably studying. That is going to start from 4th and 25th of October. Once you enroll with us, you will be guided by the best in the UPSC teaching. The faculties over here, each one of them have at least given their personality test at least once. Some of us have given it multiple times. So that is the kind of expertise and experience that we are talking about. Now, once you enroll with us, there are a lot of advantages. Some of them are listed here. The most important being the one-on-one mentorship also is provided to you. And also the batch size is going to be very small in order to have individual attention to each and every aspirant. There will be daily mains answer writing practice. There will be, of course, test series for prelims and mains. It is basically going to act as a one-stop solution for your UPSC preparation. But one more important thing is the 360-degree coverage of current affairs, wherein one entire day is given to current affairs live classes every single week. So if you want to enroll with us, you can simply download our new app or log on to our website, that is www.legacyis.com, or call us on these numbers that are there. So now let us continue with the news. So the question is, why a new bill? The reason is, first, it was quite old. But of course, there needs to be more reason than that, right? So simplification. This bill attempts to simplify the thing. See, it's very important to simplify. The legal kind of languages, difficult gibberish languages is not required. Bulky languages, too much of complexity is not required. It confuses the taxpayers. It basically nudges them to avoid it as well. So if you make it simpler, more number of people will be attracted and easily be filling. See, of course, you have to pay taxes. But then, if you make it easy to pay taxes, the efficiency of tax collection increases and the tax net also increases. So it is not just going to help the people who are paying the tax, but also will definitely help the government to get more tax revenue. So leaner and focused law. Next, easier to read and implement and comply with. It should be easier to read, then only you will be able to comply and the government will be able to implement any guidelines that would be there. It removes, of course, the archaic language and redundant provisions. Redundant means the repetitive provisions have been removed. The archaic language has been made simpler over here, and of course it modernizes the tax structure that is there. Modernizes means it takes into account the best practices all over the world and it is going to be implemented in this particular new tax bill which has been passed. We are still calling it a bill. The moment it gets the assent of the president, becomes an act. Now, what are the degree of change? So we are saying to make it simpler, make it less voluminous. So what is the change in reality? So if you look at the change, the number of words have been reduced. You don't have to remember the exact number of words, but at least know that it has been approximately halved. right? So number of words from over 5 lakhs has been reduced to 2.6 lakhs. So there is a huge amount of reduction. The number of chapters have been reduced from 47 to 23. If you would have just seen this, you may say that the chapters could be bigger, but you can see the number of words have also reduced. If you look at the sections from around 819, only 536 sections are there. The tables, now the tables and the formulae are over here more, have been added. So if you look at the tables from 18 to 57, so there is an addition of 19 tables and there is an addition of total 40 formulae. So this is what has increased in the factual sense. Moving ahead, what are the key provisions? A very good provision that is coming, that is going to delight the taxpayer, is the refund rules. So what are the refund rules? Previously, there was a restrictive clause. Restrictive clause means the refund will be given only to those taxpayers who have filed for refund timely. So filed for the ITR timely. So refund only if timely filing is done. What filing? The income tax return. You have to file the ITR, that is income tax return. So if you would have filed on time only, then you will get the refund, else not. But that particular clause has now been reduced. Now even if you would have filed it later, you would still get the refund. So that provision is a good news. Now, so basically refund allowed even for the belated filings. Then you have TCS and on LRS. This is basically the tax at the source itself, which is being collected on the liberalized remittance scheme. This is a scheme for remittance. Remittances are coming from the foreign countries into India. So what has happened is there is zero TCS for education remittances via financial institutions. So let's understand what this means. Remittances means the money is being sent by an Indian national who might be an NRI, for example, non-resident Indian. When they are sending it to India, if they are sending it via financial institutions for education, right? At that time, the tax that is being collected at source, TCS means tax collected at source, will be nil in this situation. So again, a good news. Next, you have basically alignment with old act. No expanded scope, rate still remains the same. So for the LLPs and AMT, it remains the same. Limited liability partnership is what we are talking about here. Then you have the nil TDS certificate. Now TDS is what? Tax deducted at source. For a lot of part-time employees, etc., even for full-time employees, there is TDS of 10% tax deducted at source. The employer themselves deduct that tax. If they are not deducting, that certificate is going to be made available for taxpayers with no income tax liability. There is going to be a certificate of nil TDS that is going to be issued. Now, house property income, if you talk about, so 30% standard deduction after municipal taxation. What is municipal tax? Every year you pay a property tax, right? In this, the municipal government is also taking the benefit. You have sewerage supplies, sewerage tax, water supply tax, so on and so forth. So 30% standard deduction after municipal tax will be available for house property income. Means the income that you are generating from a house, if you have given it on a rent, for example, so deduction will be made available to you. Now, other provisions include transfer pricing. Now, what is transfer pricing? Within a single company, there are certain goods, equipment which could be, sort of sold or transferred from one department of a company to another department of a company or another subsidiary of a company at a particular price. So that was the price at which it is being transferred is known as transfer pricing. There was a lot of ambiguity in determining the transfer price. That has now been eliminated. I hope that's clear. The next is the carry forward of losses. So see, when it comes to income tax on salary, it is very straightforward. Every year on year, you get salary, you are taxed. But that's not the case with companies. The companies might make certain profits and the next year it might make loss. So when there is profit, they are being taxed. When there is loss, What about that? So the companies are allowed to carry forward those losses to the next year, so that if in the next year they are making, for example, they have made 10 crore of loss in the previous year. Now this year they have made 20 crores of profit. So they will not be taxed on this, but they will adjust this 10 crore of loss in this year. So their actual profit after addressing the loss is only 10 crore. So this will be their taxable income. Now the law was very ambiguous. There was ambiguity, confusion with respect to the carry forward nature of the losses. That has also been clarified over here. Right? So these are the changes that have taken place. Next is the non-profit organizations and the donations. This is NGOs, non-governmental or non-profit organizations. So the old rule said that there will be exemption of 5%. Exemption of 5% on tax would be given to the NGOs for anonymous donations only. Only for the anonymous donation. But now that base has been expanded, and now it says that you will be getting 5% exemptions on total donation. That means anonymous as well as non-anonymous. So what it does is it facilitates the NGOs to take more and more non-anonymous rather than keeping anonymity. So this will give more clarity, basically more transparency also will come in over here. Now all this is in line with the recommendations of the select committee. Next, the digital era provisions. So the digital era provision means you are keeping money in the form of online transactions rather than in cash. So the IT department has been given the powers of surveys, searches, seizures with respect to not just, you might have seen raid movie wherein the people come and raid the house, but it is there in electronic form, the money. So there needs to be power to the IT department for seizure of not just the house, the factories or the search of that, but also the email servers, the social media accounts, so on and so forth, the cloud, the remote servers, online trading, all these powers will now be given. The one downside of it is that it is criticized because it has been passed without due deliberation in the parliament. So that is one issue of this particular bill. Now all these provisions would be implemented with new rules that are coming up. So stay tuned, when the rules for different provisions are revealed, we will be discussing them as well. Thank you.